Good morning, everyone, and welcome to the weekend update. What a crazy week we just had. I'm not going to go into it. We know, we can hear it every day on the news. What's going on out there? Just utter mania and crybabiness from guys who short stocks who shouldn't be short 100% of the float and got their noses boxed in and then went crying to mommy. But anyway, let's start off here with the Dow daily chart. And we finally had that selling. Not really a surprise. We've been kind of preparing for it over the last couple of weeks. I've mentioned, since the middle of January that typically it slows down towards the end of January and the first few days of February. Doesn't happen every year, but a slowdown usually happens, especially when we've had a mania. Remember, back into the election, we were at 26,000. We've had a 5,000 point rally over the last 2 months. A retrace is healthy. There are 50 stocks. 50, that is it. Stocks under $1 right now. A year ago, I believe the number was about 1,000, just to give you perspective on that. But looking at the Dow daily chart, we broke that uptrend line. Where's a good support resistance level? Around this 29,500. This would be the 38% Fibonacci retracement. I'm not going to go over that because if I threw this chart up here, it would just complicate most of you. But the areas that should offer some support are this 29 to 29.5 if they don't bounce us back come Monday. As we've noticed over the last several months, when we have these kind of red days, they seem to bounce the market right back up quickly thereafter, especially on a Monday. QQQs also broke that support line. So support here is 310, the 50-day moving average. We've got a lot of hot sectors out there. The market was down pretty big on Friday, but it didn't matter. We had some hot momentum sectors. There's always something moving. Now, before we go any further, if you were crapping your pants last week during these red days, as I've said in the room, that means you are overexposed. You own too much of one stock or you own too much in your portfolio. Use that fear, if you had it last week, to adjust your risk tolerance. Remember, the goal is to be able to sleep at night. Don't be having those mindsets that you see out there on social media about getting a Lambo a day and buying a new house and all that utter nonsense you see from guys going all in on option trades, etc., etc., etc. Use that to your advantage. If you had a little bit of fear, raise those cash levels. I'm sitting on about 75% cash right now. When these red days come, if there's no trades, we sit back. If there's trades, we do them. That's the way and life of a trader. You can't be overexposed in the market, especially after you have a lot of mania. But let's look at a couple of large cap plays. AI was a very big winner for us last week. Recall I talked about it on the weekend video. We got in a little bit early. The only people that get in these stocks at the absolute bottom or sell them at the absolute top, they're experts at Microsoft Paint. That's all I'm going to say. 122, 50 bucks, 150, $30 gain that on Monday. Very, very nice. If we look at the 1 hour chart, it's now come down to a support level where it could, if we see the large caps bouncing on Monday, we could see this one bounce back up to the 150 area. I'm torn on whether I want to buy this one or not. I would like to be buying closer to 130s, but I'm going to, look and see what the overall market is. This could be a nice little large cap trade for $2 to $5 to $10 come Monday. But one of the hot sectors over the last couple of days, of course, crypto. Did expect crypto to do much better, but there's a concerted effort to smack down the cryptos this weekend, which is kind of surprising. It doesn't help that the brokerages continue to restrict traders from actually buying, because how dare the small guy make money in the market when the big guy is not. But cryptos, AIKI, all the research on this one, gave us two really big bounces on Friday. Looks really set up for a retrace back to that 2+ area. Now, AIKI is also biotech, and some news coming out Friday and Saturday. I've seen a lot of chatter about it. Psychedelics, mushrooms, for lack of a better word, are starting to get put on ballots on other states. These guys, if you look at the early January news, are one of the few biotech players in this sector. So that's another bullish angle for AIKI. PHUN was very fun on Friday. Now, the reason we jumped into FUN, they have FUN tokens, altcoins, and altcoins, if you haven't been watching the news, have been actually doing better than Bitcoin over the last week or so. FUN gave a very big pop up to 2 early on Friday, then came all the way back down to 160, and then a video on YouTube from the COO from FUN highlighting the short action in the stock turbocharged this stock into the close. So let's see what this one does come Monday. We have a golden cross on the FUN chart. That is when the 50-day crosses up through the 200-day moving average. This is a bullish development on the chart, and just look at the volume here on this stock. Could be a very, very nice move on this Monday. A new swing play we picked up, GROW. Now, GROW owns an investment in a block Bitcoin and Ethereum miner. Big volume move on Friday. Now, what I want you to pay attention to is this is the 10-year chart. 10 years we're going back on this chart. This is a huge breakout level on GROW. It reminds me a lot of BT that we played back in December when no one wanted this stock at 4 to 5, ended up selling off, and then went on that 500% move, 1 week move, when it was able to itself break out over resistance. That is what GROW reminds me of. Do a little bit of more research on it, but it's one of those, it's had a pretty good run, but you don't see a lot of people talking about it. And look at the volume on this one. This is the volume side here. This was one of the first days. Actually, it didn't even break 1 million volume yet on GROW. So this stock, as a legitimate Bitcoin Ether play, has not broken 1 million in volume yet. So this is going to be a play to keep an eye on in the coming weeks and months on the crypto mania we see out there. The other hot sector, of course, is space. Space stocks kind of took a backseat to all the squeezing nonsense out there. Now, space was moving up in the last week, but that was more to do with all the naked shorting that's in the stock. Comms was a recent IPO 2 weeks ago. Dig around on the research. I'm not going to jump into it on this video, but the chart is set up very, very nicely here. This is the 1 hour chart. Has a magnet towards that 550 area. Really, really good support on it. Chart looks very, very nice, especially as a recent uplisting stock. Once they start dropping some press releases, it could get very, very fun on this stock. MDGS, of course, has its poker in a lot of fires. It's been a play on their EV charger. Remember, there is a ton of money flowing into EV charging going forward. Biden is planning on making all federal vehicles electric. Well, that's one great thing for these electric car makers, but those electric cars are going to need charging. This is a huge, huge sector going forward. This is the monthly chart. The monthly chart is trying to break out. If we look over here at the weekly chart, the weekly chart is also trying to break out. You see, we're holding right underneath that 50-day moving average breakout. Now, a lot of stocks got hit on the face on Friday. A lot of panic out there. A lot of traders getting shook out of their positions. Where would I be okay adding to this position? It would depend on what the EV stocks are doing, but anywhere around this 250, 270 area, I might be interested in adding. I have a good swing position in this one. This is one of my larger positions along with comms right now. So I'm okay sitting on my shares. I don't have to rush in and add more, but if there's some stupid dip out there, I'll probably go shopping. The other new swing I picked up this week in the space sector was SYPRAAU. This chart looks really, really nice here on the 1 hour. Near-term target would be a move up to 280, 290, and then a break above that, and we're looking at 5+. Now, the space sector is going to be in play into April. The Cathie Woods Fund is supposed to launch towards the end of March. So any of these stocks, there's not a whole lot of stocks in this sector. Vizzle is another one we're swinging on. I don't think I have it here to talk about today, but these are stocks that I plan on swinging into the launch of that ETF, because, you know, when you've got a major cult ETF that's moving into a new sector that doesn't have a whole lot of plays, the stocks that are in that sector should do well up into its launch. The other hot area of the market, of course, is penny stocks. There are only 50 stocks under $1. So it's getting to the point we don't even need a reason to jump into these just because there's so few stocks left. You've got traders running into them. Now, AAU is actually a metal stock. Gold and silver was getting a lot of chatter over the last week. So this one is nicely set up. We've got nice support on it for a bounce back up to 85. And all these stocks, even the absolute garbage of garbage penny stocks, aka ZOM, have run over $1. That's all I'm going to say when we're looking at some of these penny stocks. XPL, this is another metals play. This is the 1 hour chart here. You can see after that initial pop a few days ago up to 90, it's kind of slowly bled back with the market, back down to a support line where we should see a bounce back as traders look for plays to play. UAMY, another one, EV sector. There's a lot of things going for this one. These guys also own a division that has a material that's used for carbon capture. Remember, Elon Musk put that sector on notice last week with his $100 million award for carbon capture technology. They mine zeolite that is being used. You know all the DD. You can just look at the links that I posted and make your own assumptions about it. But we've got a nice little bottom on this 1 hour chart. I'm actually going to look and show you. This is the monthly chart of UAMY. You see this here? This is the 200-day moving average. This is a significant level to close above on UAMY. 84 cents. 105. We've got there a couple years ago. It's trying to break through it multiple times right now. If you look at this monthly chart, it's got a 2 magnet. Now, this is a monthly chart. This is looking out. This is not going to happen tomorrow unless they have some monstrous news. This is looking out there and showing us the potential that this stock is in a breakout mode. Despite what you see on the hourlies and the daily charts, if we look at the daily here, dailies had quite a run up, a little bit of pause. Next move higher should set us free. ITP. This is another one of my larger swing positions as I wait. Masks, if you didn't see this weekend, the CDC federal law now mandates that you wear a mask when you are traveling. That it took a year kind of blows your mind. It's going to be one of those things when they look back on the history books about how disastrous we approach COVID, that it took 1 year for a federal mandate to wear masks to roll out, but that's a whole nother story. These guys make masks. It's under the influence. They did their offering like INDU did, but they had warrants. And these warrant guys are converting the stock. What they end up doing, these warrant holders, they short the stock to convert. This is another part of that reason where the nonsense you're hearing on the media about GameStop and these other short squeezes, you're not hearing about all the other crap that they get away with when they do stuff with warrants and offerings and whatnot. Once they go through these things, ITP should be free. It should be free this week based on all the news we are seeing out there regarding the masks. But one thing we do know, we're not going to get surprised with an offering on this stock because in their filing they said they can't do one for a month. So what's probably going to happen is they're going to churn and convert all these warrants, and then out of the blue, maybe it comes out a press release, maybe they just take their foot off the throat, the stock zooms. Remember how INDU traded in that 36 to 45 cent area and then they set it free? Probably going to see something similar on this one. Where will they really come for it? It looks like the line in the sand right now is 95, 96 cents. This is a great pickup area. This is where the scanners will tell all the funds to start chasing. And that's what we're looking at for there. Now, comments on Friday. Defense Production Act to make PPE, personal protective equipment, and masks. WORX is a player in this sector. This could be a nice low float mover in the next couple of days. It had a big move on Friday. Next breakout levels 227 for possibly 250 to 3 on this one. Now the other hot sector we see right now is merger plays. SNCA again had paperwork filed this past week that listed 209 as the merger value. It's down here. We all know eventually they're going to probably chase this stock up here. So I'm okay sitting in my swing position, and when they give stupid dips, picking up shares that I can help make that swing position a free position. Torch, as we know, merger is supposed to happen in the coming days. Now, this is a stock. We've had fantastic gains on it. If you're still in this stock and you're looking for a support spot, I would say 135 to 138 is a great level. Let's see if we can break 184 in the next couple of days for that move back above 2. Last stock I want to mention, ZSAN. Hopefully we get that press release tomorrow. It's been 30 days since the FDA. The way this chart works, just looking as a chart play, each time it busts out, it makes a new high. We get that kind of news, we could be looking at 140 to 150. Now, they also make syringes. They're out there. You can see on the website, you know all the research on that. And syringes is another one of those PPE or Defense Production Act things we're looking at. Now, the last thing I wanted to talk about today, when I said I'm about 75% cash, does not include the money I have in these pre-SPACs. And what I mean by these pre-SPACs, these are these SPACs that have recently listed and don't have a merger target yet. I like buying these stocks when they're under 11 bucks. They seem to be a better way of getting interest on your money. LEGO, let's just call it LEGO, listed about a week or so ago. Alternative energy potential sector they're looking at. These are one of these stocks. The way I view them is add them around the 250 area, and you're looking at probably 11.50 to 15 bucks if they pick up a great big merger. Last week we had one of our plays, VJack, that we had been in for some time, end up saying they were talking with 22andMe. That was a 30% move in a month or two on that. So that is where I have some of my cash parked, because the downside risk is 10 bucks. Upside possibly 10 to 25, 30%. So that's it for the video, guys. Remember, if you were stressing this past week, you own too much, adjust it. Raise your cash levels. Reduce your position sizes. You're a trader. Just because you sell something doesn't mean you can't rebuy it if the story or the market changes. So have a great weekend, and I will see you all in the chat room tomorrow. Bye.